Hey everyone, this is your October 2023 Ottawa Real Estate Market Update. This month's market update is brought to you by Tic Tacs. For those times where you want to mint, but you don't want it to taste good. Just kidding, we don't actually have any sponsors yet, but let's dive into the stats nonetheless. So as always, we're going to start off by chatting a bit about what we saw in Ottawa in the month of September in terms of both freehold and condo sales. And once we're done going through the stats, I'll give you a few of my personal takeaways from what we're seeing in the market right now. All right, so we get pretty detailed with this, so buckle in. All right, so Andrew, let's show them your magic and put the freehold stats for the month of September up on the screen. Wizard. All right, so if you've seen our recent updates, you already know that lately the real estate market in Ottawa has seen a significant slowdown. Over recent months, we've experienced a very low sales volume, very low showing activity on listings, and rising inventory levels. Unfortunately for sellers, September was more of the same. A lot of the negative trends we've seen emerge since the end of summer continued. We only sold 853 freehold homes in September. That's about on par with what we sold in September of last year, 2022, the year that comes before 2023. However, if you compare that number to other years, not including 2022, when the market was also in the tank, you'd have to go all the way back to 2012 to find the last time that we sold this few homes in September. And now to help put that into perspective, in September 2012, the #1 song in the world was One More Night by Maroon 5. Yeah, that's pretty gross. Thank God that's changed. You a big Maroon 5 guy, Andrew? No? Good, that was a test. Anyways, back to the stats. In addition to low sales totals, we also saw inventory levels rise in September. It's the 4th month in a row that that's happened. And as always, a reminder that inventory is a measure of, Andrew?
Supply and demand.
That's right, supply and demand. He's reading off the teleprompter. We're currently sitting at about 3.6 months of total freehold inventory. In and of itself, that's not a crazy high number, but when you consider that we were well below half that amount just a few short months ago, you start to see a pretty clear picture. And that's that in recent months, we've had a lot more people who are trying to sell homes than we've had people who are willing or able to buy them. Now, interestingly enough, the average selling price of a home rebounded slightly last month. It went from $710K in August to $724 in September. That's after having previously spent a good chunk of the year in the $750K range though. I'll reiterate my note from last month that when we deal with averages, we're always going to see some level of random fluctuation and variance. But make no mistake, low sales volume, rising inventory levels continue to apply downward pressure on housing prices. Now, having said all of that, while I think it's certainly possible that we could see selling prices dip a bit more as we head towards winter, I don't think that we're going to see any sort of major crash or a huge drop in prices. Now, there's a lot of different opinions out there as to what constitutes a crash, and I'm gonna leave the semantics debate for the experts on Reddit and in the social media comment sections. But the fact remains that we continue to have an overall shortage of housing supply in Ottawa, and I also have to believe that the Bank of Canada can't just keep raising interest rates forever, right? Like, you're eventually gonna get to a point where the rate hikes do way more harm than good. I think many would argue we were already there, we were there a while ago. So all that to say that until things change with regard to the supply issue, I think we're gonna continue to have a pretty solid floor here as far as real estate prices go. So that does it for freehold. Now let's quickly jump over to condos. Andrew, let's get those stats up on the screen. There we go. A quick note as well to say that all of the stats for freehold and condos are available in the video's description. So if you want to take a longer look without having to stare at my face for the whole time, you can check out the video notes. If you remember last month's update, I mentioned that condo sales had been a little bit more resilient than freehold in recent months, but we're starting to see signs of that pattern breaking a bit. Ultimately, trends for both condo and freehold are really kind of moving in the same direction. We sold 251 condos last month. That was a 15% drop from the number that we sold in August, and it's actually slightly below the number we sold in September of 2022 as well. You'd have to go back to 2015, 2016 to find the last time that condo sales totals were at this level for September, again, not including last year. Condo inventory also jumped up from last month. We're sitting at 2.9 months total inventory compared to 2.3 months at the start of September. Just like for freehold, overall condo inventory still relatively low, but it's been on a steady climb, all right? Meaning that supply is also entering the market faster than demand with condos. Lastly, as far as prices are concerned, there really wasn't much change. The average selling price for condos is really kind of lived in that $425K to $450K channel for most of the year. In September, it was at $437K, basically right in the middle of that range. So nothing shocking there. All right, so that does it for the stats. Now that we've covered those, allow me to leave you with a few of my personal observations and takeaways from what we're seeing out there. First takeaway is, I can't believe people used to listen to Maroon 5. What the hell? Oof. Anyways, no, in all seriousness, I'm sure they're all really nice guys. The first actual takeaway I have for you, and it's something a lot of agents in Ottawa are talking about right now in the forums and places like that and brokerage meetings, is that it feels like the market is at kind of a standstill. Right? It's like there's a staring contest that's going on right now between buyers and sellers, and both sides are just kind of waiting for the other to flinch. A lot of buyers right now feel like they should be getting better deals than what's out there. And a lot of sellers, on the other hand, feel like they're already priced low, right? In some cases, they're already losing money. And in many other cases, even if they aren't actually losing money, they feel like they are when they look at what they could have sold for at various points over the last 2 years compared to what they're likely going to sell for now. In a lot of cases right now, we have this gap that's very hard to bridge between what buyers and sellers feel a property is worth. And here's the thing, neither side is totally wrong in their thinking. We're in kind of this weird place with the market right now. The market we're in has a lot of elements of a buyer's market. Very low sales volume, very low showing activity on listings. A lot of the properties that are on the market have been there for weeks, if not months, and they're getting very little traction. But the one key ingredient that you need for a true buyer's market, and the ingredient that's missing from this market, is high inventory levels. That's what makes this market so weird. There's not a ton of buying, but there's also not a ton of stuff out there to buy, right? So when we're in a true buyer's market, buyers have a lot of options, right? In a buyer's market, a person that decides they want to buy a home with a certain set of characteristics in a given neighborhood and within a certain price range typically has multiple homes to choose from at any given time, right? It could be 5, 10, 15 homes, and even a whole lot more depending on their criteria. And that's what allows buyers to get deals or to be successful with lowball offers in markets like that. It's the fact that a buyer can make an aggressive offer to a seller and essentially say, here's my offer. Yes, it's a lowball, but guess what? If you don't take it, no problem. I'll just go make the same offer to your neighbor across the street who's selling a home just like yours. And if the neighbor says no, I'll make my offer to the other similar home one street over, and I'll just keep making my way down the long list of available options until someone bites. And sellers get it. They know that they have a ton of competition in buyers markets, and so they look at these lowball offers, and a lot of times they say to themselves, shit, I don't love it, but I'm not getting any traction, and if I don't take this crappy offer, I know that freaking Jim across the street who's been on the market twice as long as I have probably will, so screw it, right? Done deal. But what happens in a market like this, where there's low traction without high inventory, is that buyers don't have that same opportunity in a lot of cases to pit multiple sellers against one another, right? So in many cases now, sellers can look around and they can say, well, hold on a minute here, like I'm the only game in town, right? So why would I lower my price? If you want to buy a house with these characteristics in this neighborhood, I'm literally your only option. So pay up, or I'll just wait for someone who will, right? So from my point of view right now, in a lot of cases, both sides are probably overestimating how much power they have, and it's caused this sort of freeze in the market. And the fact that interest rates are stupidly high right now relative to the cost of living, salaries, and all that also doesn't help matters, right? So who blinks first? That's the million-dollar question. Will it be buyers or sellers? I think a lot will depend on what happens with interest rates over the coming months. However, historically, when both sides take the approach that, hey, I'll just wait it out and see what happens, sellers are the ones who do tend to come out on top more often than not in the long run. That does it for the first takeaway. On to the second. This one's really more of an observation. I was chatting with my web developer, Dave, about a listing that we just brought to market earlier this week. It's actually the home I'm sitting in right now. It's a really nice bungalow in Hawthorne Meadows, 2417 Howland Avenue. Check it out. But anyways, the conversation with the developer was around the list price. You see, Dave's a guy who pays attention to the market, and he actually remembered seeing this same property listed in 2021 for $700,000. So he was really surprised to see us list the same home a little over 2 years later at only $720,000. So Dave asked, Serge, has the market really flattened that much? And obviously the last 2-3 years, prices have kind of been a roller coaster, so a lot of this depends on what data points you're using. But in a very general sense, the answer to Dave's question is yes. Prices today are pretty close to where they were at various points throughout 2021. And the main culprit, as you probably already guessed, are interest rates. I played with some data just for fun because that's what geeks like me do. And I was able to show Dave that someone who buys a $700,000 home today with 20% down payment will literally have about the same monthly mortgage payment as a person who had purchased a $1.2 million home in 2021. Let that sink in for a minute. $700K is just slightly below the average selling price for a home in Ottawa right now. So for what it costs to own an average home, you could have gotten a $1 million home just 2 years ago when prices were around the same as they are now. Right? So how many people did you know in Ottawa who could afford a $1.2 million home in 2021? It really puts things into perspective when you look at it that way. So the takeaway here is that if you buy a $700,000 home today, you can tell all your friends that you may not be a millionaire, but hey, you've got a millionaire's mortgage. Right? I don't know whether to laugh or cry about that, but what can you do? It is what it is. So we'll choose to keep on smiling. I hope you do as well. We're going to wrap things up here for this month. I hope you enjoy this update. Andrew, let's hit him with some tunes on the way out. Damn, that's actually pretty good.